panel. I'm not going to hazard to request the president to join us because I did last time and he agreed. So this time I'm not going to do that on account that I might be pushing it. However, if the president would love to join the panel, he would love to. That's 2 times in a row. Thank you, Your Excellency. I can see why you are afraid of the capital markets for sure. So we are really grateful for that. Your Excellency, through the bottom-up economic to move forward, to look inward, and to mobilize our domestic resources and fundamentally change how we build Kenya. And today, as our chairman said, the capital markets are delivering on that exact mandate. And for too long, the story of the African infrastructure has been written in the heavy ink of sovereign debt. Today, we are getting that playbook in the language of shared equity, democratizing wealth, and revitalize the capital markets anchored by the NEC. And we know that the KPC IPO is not the finishing line. We are just getting started. So to unpack exactly how we scale this expansion, this democratization of wealth, we are absolutely happy that His Excellency, Madam Rina and DG Kibet are here with us. So let me start with you, Your Excellency. Your administration's foundation is the bottom-up economic transformation agenda, which is clearly a very bold promise to empower the everyday Kenyan. Now, you've taken what some people have stamped as the nation crown jewel, i.e. APC, and deliberately transferred its ownership to the public. Now, Your Excellency, how does this very historic IPO serve as the ultimate fulfillment of your social contract with the Kenyan people, ensuring that Wanjiko, Atieno, Jerotich are no longer just a spectator of the economy, but a direct owner of the nation's wealth?
Thank you very much, Mwiti. This morning is particularly very significant to me because 3 years ago, on my first visit to the Securities Exchange, I did make 2 commitments and made 1 request. I did make a commitment that we are going to bring ordinary people, the Kenyans in their entirety, into this equation of the stock exchange. I remember making a statement then that I have been persuading the people who are stealing cattle, the stock theft people. And I was telling them there is a world of a difference between stock theft and stock exchange. And I was telling them, you must stop this stock theft and instead go to the stock exchange and buy and sell. That's number 1. Number 2, I remember when I came here, I said, there is great value and there is a lot of resources that we can mobilize from the Securities Exchange so that we begin the journey to wean ourselves out of heavy taxation and heavy borrowing. And I requested at that point that the stock exchange should consider mechanisms that would help bring ordinary Kenyans into the stock exchange. Today is a fulfillment of all the 3. Number one, my commitment that I would bring government assets to democratize ownership of government assets to be owned by more Kenyans. And I did make a specific commitment that one of the companies that we are considering to bring to the Securities Exchange was Kenya Pipeline. Today, Kenya Pipeline is here. The commitment I also made that we are going to democratize that space. If you look at the number of ordinary Kenyans that are bought into the IPO, it speaks directly to the fact that more and more Kenyans are coming to the exchange. And thirdly, the ZD platform, which now a Kenyan anywhere from the comfort of their phone, they don't need to have a CDS account. They don't need to do all the things that were required of them to do. They don't have it. The denominations has come down. And you just briefed me this morning that because of the ZD platform, 61% of trading today by volume in this exchange is by Kenyans who are buying 1,000, 2,000, the ordinary Kenyans. That is phenomenal. And we have just started. This is a platform that is hardly 3 weeks old.
Yes, correct.
About 3 weeks old. And you can already see that 61% of trading has now been taken over by ordinary Kenyans. And this is the journey we want to make. Let me say one more fundamental thing why this is very significant to me and to the government of Kenya and to the people of Kenya. We've engaged in IPO with KCB, with Safaricom, but what is different today with this IPO is that the resources we are raising from this divestiture is directly going to generate more public assets. The money that we are going to raise today here will not go to paying debts. It will not go to paying salaries. It will go to creating infrastructure. And that is why, even as we pushed for the delisting and the divestiture of Kenya Pipeline, and as I look forward to more divestiture of public assets, that divestiture is going to specifically to go to a dedicated infrastructure fund that will help us create more infrastructure that can be divested in the future. One, as I said yesterday, one of the first beneficiary of this divestiture is going to be the building of the Jomo Kenyatta International Airport. And we will shortly be telling the public where this money is going to be invested. And I promise you, it's going to be in public infrastructure that is going to support the growth of our country. This is different from what has happened before. We have sold public assets, paid debts, paid salaries, and we cannot account for where those public assets are. We are making a deliberate, significant shift that we are going to invest in assets that Kenyans can see. We're going to build new infrastructure assets that will support the growth of our economy. That, to me, is as significant as it can get.
Thank you, Your Excellency. I think that's very clear, and the beauty is every time you are at the exchange, you make promises, you keep them. So we are very happy about that. Allow me to turn to the lady, Madam Rina. Rina, this is the first major state-backed IPO since the historic Safaricom IPO more than 17 years ago. And you've been at the forefront of this, given your role as the transaction advisor through Faida Investment Bank. Given how much the financial landscape has evolved since 2008, when we saw Safaricom, what would you share with the audience as the shifts that have actually taken place that must also continue to take place to ensure that the NSE reclaims its position as the primary wealth builder for the everyday Kenyan, as far as IPOs are concerned?
Thank you so much, Your Excellency, and Frank, for that question. There's three main shifts, I think. The first shift that we've got to make more consistently is financial literacy, something I'm very passionate about. I think the more that people understand what shares are, how I can benefit through investing, and what an investment really looks like. Betting is not an investment. A CDS account for shares is different from a CDS account for bonds. The more that we consistently educate in every platform possible, consistently, not just when we have an event like an IPO or an event like a rights issue, but throughout consistently in schools, in colleges, I think we will see a lot more participation. The second shift that we made was radically changing access and ease of access. It will increase. I think one of the things that we recognized initially is that a lot of people in this ecosystem still use manual account opening processes. But that changed as the IPO continued, and we then began to see a lot more access through mobile. And of course, with ZD, then that completely shifted everything. And of course, with the e-IPO system, midway through, accepting to open CDS accounts through the IPO system made a lot easier. So radically changing ease of access is the second thing. I think finally is building trust. And we build trust by communicating, by disclosure, by transparency, and consistently just sharing how we are performing as companies. And sharing in a manner that is easy. And on platforms where Kenyans are and East Africans are. People are on TikTok, they're on X. And some of the things that we also experienced during this IPO, having forums on X spaces, help people be able to interact with this company and to know exactly what's happening and to get a perspective that they can understand. And so those are the three shifts, I think. Yeah.
Thank you, Rina. Clearly, we're in a whole different world, and it's also true to say this IPO is the first 100% e-IPO. So that has gone to also vindicate the innovations and the adoption of new technology that we've all had to do to match up with other global players. Allow me to turn to my brother, DG Kibet. Lawrence, allow me to call you Lawrence. DG Kibet today proves that privatization isn't about losing state's control of public assets. It's about transferring wealth directly into the hands of Kenyans. And as His Excellency has clearly mentioned, there is intention to continue to do this. So from where you sit, given your mandate within National Treasury, how aggressively, and I use the word aggressive intentionally, how aggressively is the Treasury going to be in unleashing the rest of our state-owned enterprises onto the NSE to continue this momentum?
Yeah, thank you, Your Excellency. Thank you, Frank. I'm not going to get into the trap that Frank is trying to lay. So let me put it this way. I think we from our perspective as the National Treasury, from an economic standpoint, our position in terms of delivering the better agenda from a capital markets perspective is centered on three issues. One is the issue of stability, economic stability. Number two is fairness. And number three is creating opportunities in an equitable manner. That is so profound in the sense that if you remember when His Excellency was here the first time, he gave marching orders that And he didn't use very kind words for some of us, that, you're called Mandarins, and he thought Mandarins are clever people. But why are these people beaten, by betting companies, for example, that, many of the border people, many of the youth will be more knowledgeable on issues betting, but not the stock exchange. So the other issue is, of course, you also needed to sort out market distortions, for example. Many people are losing money in schemes like housing schemes. We've seen quite some money being lost in that front. So what are we doing to be able to address those kind of challenges? And for us, the issue is to say it's not just about privatization. So privatization is just one of those reform measures that we are putting in, but we have many other avenues of what we've put across. More recently, in November, His Excellency the President signed into law what you call the government-owned enterprise law, which is one of the most decisive legal instrument that has been put in when you talk about reforming state-owned enterprises. So even before we privatize, there will be a number of these companies will then be able to stand in a platform from a governance perspective, from a structural perspective that is market-facing. They'll be able to come to the market and be able to issue a number of instruments even without privatization. So with that, we've been able to undertake a number of reforms in that space. The sugar sector is one of them, where all the state-owned enterprises have now been brought back to life through a leasing model, which is not necessarily privatization, but a reform measure which has been able to safeguard 600,000 jobs directly in terms of farmers, the jobs for employees working directly there, and livelihoods that depend on that industry. We're replicating that in other sectors, like we're now doing it on the textile industry. And that's why it's not, it wasn't a shocker to us that, when the Switzerland-based organization, IMD, the International Institute of Management Development, ranked Kenya as #1. And when you look at that yearbook, it's not about plans, it's not about strategies, it's not about intents, it's about measurable outcomes that have been delivered. And Kenya was #1, making a debut for the first time. So that speaks to the kind of reform measures that Kenya has been able to undertake over time. And we will be able to see that, and we will be able to create more opportunities in different mechanisms. Thank you.
Thank you, DG. Your Excellency, before you close the panel for us, with your permission, allow me to throw a question to CS Wandaji, given that KPC sits in his docket from an energy perspective. CS Wandaji, one of the most consequential things of what's happening in Middle East is the impact on the oil and gas supply chain. Maybe you can share with us what's your own view on what this means for Kenya, and more importantly, I think for potentially the larger East African region, as far as matters energy are concerned, and what's your ministry doing to secure our energy access, given what's happening in the larger Middle East economy, in Middle East region?
Okay, thank you very much. Clearly, the situation remains fluid, and it's evolving very, very fast. For instance, Thailand and China, about 2 days ago, actually stopped oil exports. Bahrain and Kuwait have actually also, the national oil companies have actually also declared force majeure in terms of their contractual obligations. However, with the continued guidance of His Excellency the President, we continue to engage very, very closely with our government-to-government suppliers. That is the Saudi Aramco, ADNOC, and ENOC, in terms of contingency planning. And for that reason, there is really no cause for alarm. In the short to medium term, we have got security of supply, and we continue to monitor the situation very, very closely. As a matter of fact, from here, I'm going to a meeting with the oil marketing companies to continue this process of review and close monitoring. Yeah, thank you.
Thank you, CS. I think we are well aligned. Allow me, Your Excellency, to come back to you to close the panel for us in the interest of time. And I would request you to share with us, Your Excellency, first of all, your views again with regard to the use of proceeds to develop the Kenyan infrastructure, especially given yesterday under your leadership, you hosted leaders yesterday at State House when you were signing the National Infrastructure Fund bill into law. And we know some of the proceeds from this IPO will go to support the National Infrastructure Fund. And also we would love to hear from you what sort of request you would make of the capital markets to support the national infrastructure agenda. Thank you.
Thank you very much. I think it is correct, just to buttress what Lawrence was saying, that in restructuring our economy, we are not only looking at what we can do with privatization. We are looking at the whole exercise of making government efficient. And the reform process is underway. He has mentioned 3 spaces. The sugar sector was in chaos. You know, we were spending public money to pay farmers, sugarcane farmers. We were spending public money to pay workers of sugarcane companies. A completely ridiculous thing to do. Yet, it was what we are doing. We spent 5 billion shillings to give money to sugarcane companies. Because of the reform we have done in that sector, very difficult. In fact, many Kenyans remember me in Kakamega telling somebody, mambo ni matatu. And it was because the situation was so unreasonable, you know, that you couldn't even understand what was going on. What is the situation today? The situation today is that we no longer pay sugarcane farmers. They are paid by the factories. We no longer pay workers of sugarcane companies. The sugarcane companies pay. Farmers are paid every 7 days. It used to take 6 months to 1 year. The even better news is that those companies that have never paid taxes, today we are raising 1.5 billion from sugar companies into the tax kitty. So we have moved from paying, using public resources to pay, to getting public taxes into our kitty. Simple transformation. We're doing the same with river tax. And yesterday, we had a bigger conversation on KCC. We have spent 7 billion shillings on KCC in the last 3 years. And I have made the decision that it's not going to happen again. We're going to reform Kenya Cooperative Creameries. We're going to make farmers own the factories, cooperatives to own the factories, and we are going to carry out the same transformation in that space. And it is the reason why you see the changes in our economy that are there. It is not by accident that our exchange rate is stable. It is not by accident that inflation is low. It is not by accident that we have a bigger kitty of foreign exchange reserves. It is deliberate actions that we have done. And it is the reason why, even as we divest, and you have asked Kibet a question as to what is the horizon, what's the runway. I want to tell you, we will be back. And it's going to be soon. I don't know when to say that soon is. And it is because we have a lot of value locked up in mature public assets. Take, for example, Kenya Pipeline. Faith, the chair here, said Over the last 5 years, they've given us 24 billion, which is correct. On average, the mathematicians here, 25 billion in 5 years is on average about 5 billion a year, right? So this company, worth so much money, is giving us only 5 billion shillings a year. Look at the value we have unlocked. 65% of the company, we now have 100 billion. These 100 billion, if we were to wait for Kenya Pipeline to give us dividends, how long would it take for us to give us 100 billion? 20 years. But with this 100 billion which we have today, we will build the airport. We will generate another maybe 1,000, 2,000 megawatts of energy. We will build about 12 dams. And we will build many kilometers of roads across Kenya. If you count what that would amount in 20 years, it would be 100 times the value we would get from dividends. So there is a lot of value locked up in some of these companies, and we have to use innovative ways of how to unlock this value. I remember we were here on the Lindsay product that helped us to build Talanta. We took a portion of the sports fund. And I saw some small argument by some people there. Oh, you know, this government, they have pledged sports fund money for 15 years to build Talanta Stadium. Yes, we have. That's correct. But the question I asked them, the same sports fund has been there for 20 years. What has it achieved in 20 years? Something that we can see. Nothing. At least for the next 15 years, we will have Talanta Center, Talanta Stadium. It is a signature project. It is a project that next year will give us the opportunity to host AFCON. It's going to make money going into the future. In the past, that sports fund was used to build Cabro here, a gate there, I don't know, something there, and most of it was actually misappropriated. At least we now have the discipline to pay for Talanta. This is the kind of thinking, this is the kind of innovation that our country so seriously desires. And therefore, as I sit here this morning, I am very proud of the achievements we have achieved together. I am very happy that we have pushed this Securities Exchange. The numbers here are 3 times, okay, maybe 2.5 times what the numbers were 3 years ago. True or not true? So that's the kind of thing that changes the country. What is transformation? Transformation doesn't happen. It is made to happen. This lady just said the way to predict the future is to create it. We must create the future ourselves with our own innovation, with our own creativity, with our own ideas. And that's why I sit here this morning very confident about the future of Kenya. If we move at the pace at which we are moving, we will change this country in our lifetime. The numbers speak for themselves. And therefore, the runway going into the future, we will continue to reform our space. Apart from what we are doing in all the other areas, I signed the government-owned enterprises law that now sets the standard for commercial government-owned entities like Kenya Ports Authority, like Kenya Airways, Kenya Airports Authority, like KenGen, and all the others, sets the benchmark for them. Going forward, boards of directors will be appointed in a competitive manner. People who have served as politicians like myself, they have to have a cool-off period before they can come there. What we've done in the past is, somebody fails in the election, the next day we nominate them to be a board member in Kenya Pipeline. They arrive there, the first thing they're looking for is, I've come from an election. Where do I find some money? Where is the contract? Where is the... And we mess up the whole space. That is going to be a thing of the past. And I am saying so with a lot of respect to politicians like myself, right? Me being one of them. We have to seriously consider how to move the country forward. It is the reason why I signed the conflict of interest bill, to make sure that those of us who have political power or influence do not interfere with the prudent management of the affairs of our country. These are steps that, and by the way, I had a lot of difficulty persuading members of parliament to pass the conflict of interest bill, But finally we had a candid conversation and he said, yes, there are sacrifices we need to make to get the country moving. So thank you very much. I don't want to give you a long lecture. Thank you.
Thank you, Your Excellency. I think this is the sort of lectures we like. So thank you. What we've taken there is KPC is not the climax. It's just that we are in the beginning of a robust pipeline of opportunities. The best way to build the future, to predict the future, is to build it yourself. Key takeaway for us there. Thank you, Your Excellency, for accepting to be in the panel and for the very authentic and insightful discussion that you've shared with us. Thank you, DG Kibet, for sharing with us the three things that are driving your operations at the National Treasury. And thank you, Rina, also for sharing with us, incidentally, also three things on the insights as far as the IPO went. Please, ladies and gentlemen, join me in thanking His Excellency and the panelists for this. Thank you.